Aloha! My name is Alan Wilson, Vice President of Hawaiiana Management Company in Honolulu. I would like to give you some quick pointers on how to read your financial reports that you receive every month from Hawaiiana. Your financial report is arranged in sections. The first thing you encounter is the variance report. We'll come back to that one in just a minute. But let's start with the statement of receipts and disbursements. This is also called the income and expense report. The report lists all the various income lines and expense lines for the specific month according to the general ledger categories. This total monthly amount is compared to the budgeted amount for the month, and the difference is the variance, hence the variance report mentioned earlier. If the variance is significant, it is reflected on the report. On that same line, it also shows the amount collected earlier in the year added to the current monthly amount, the year-to-date total. That total is, in turn, compared to the year-to-date budgeted amount, and the difference of those two numbers is the year-to-date variance for that general ledger item. Let's focus for a second on line 6690, Miscellaneous Repairs and Purchases. It shows $207.88. Remember that amount. We'll come back to it in a moment. After the income and expense report, the next section is called the cash report. There are usually at least 2 pages to the cash report. The first shows every bank account your association has, what type of account it is, and the sum total of all the activity for the month in that account. It is important to know and understand that all of your association funds are in bank accounts opened in the name of your association. They are not merged with the funds from any other association or with Hawaiiana funds. That merging of funds with other associations' funds or with Hawaiiana funds is called commingling, and that is illegal. The second page of the cash report shows the total amount held by each financial institution. So, for example, if your association has 4 different accounts with Bank of Hawaii, the sum total of all those accounts would be listed as a single dollar amount. This is important for keeping track of the FDIC limit of $250,000 per institution. The next section in the report is the general ledger. The general ledger report shows each and every expense item, the sum of which goes into the amount shown on the income and expense report. So, we talked a moment ago about the general ledger 6690 with an amount of $207.88. In this example, we can see there are 3 items listed which total the $207.88 under the net change heading. The general ledger is where all of the figures come from. The next section in the report is the bank reconciliation report. The whole financial report must balance to the penny every month, and this report shows how that works. The final sections of the financial report show the lists of owners who have paid in advance or have not paid all of their amounts due, therefore creating a delinquency. The delinquency report is also further broken down by aging. How delinquent is this owner? Is it 30 days, 60 days, 90 days or more? Once you get familiar with the contents of the financial report, you will find that everything ties into everything else, and it all makes perfect sense. Your Hawaiiana management executive should be able to answer any questions you may have about the financial report. Mahalo and aloha.